Good day traders, Richard Jacobs here and welcome to this week's edition of the Underdog Weekly Perspectives Report. First up, I just want to apologize for not putting a report or a video out last week. We did have a few technical glitches on our side and a couple of subscribers did actually mail me and ask me why we hadn't put that out. So apologies for that. Everything seems to be sorted now. So perhaps just a bit of a recap in terms of what's happened over the past week, because it's been quite a, let's call it, dramatic week, at least from a political perspective in South Africa. So if we look at what's happening in terms of price structure, and up on the screen as we usually start off with, we have the daily chart of the top 40. You'll recall that one of the things we've been eyeballing, we had this breakout here out of this falling wedge structure right there, and then we had this pullback all the way back into structure. And what we'd done was, once we'd retested the breakout level and put in this long-tailed reversal candle right there, or continuation candle if you will, we actually took a long position at this point and we looked to ride it up all the way back into this around about this 46,000 level over here. Which coincided with previous structure coming in right here, as well as a 127 projection of this 127 Fibonacci projection of this leg of the move here. So we hit those targets quite nicely. We took off our profits for about a 2-to-1 reward to risk, which was quite nice in the context of what's been happening in the markets of late. And one of the things we've been exploring in our daily reports with our daily subscribers is really, so where to from here, especially in the context of it being a very uncertain and volatile trading environment as a result of some of the political happenings in the country. Well, if we look at it from a couple of perspectives, firstly, just the most recent trading action. We've had Friday and Thursday, we've had these long tails, quite long tails being printed on the daily candles, which is indicative of further upside potentially being on the cards. Also, if we look at that leg, that initial leg, or that breakout leg over there, remember we took off targets at this level. Let me just actually put it in here. We took off targets at a 127 projection level right there. What you'll see is, if you keep the 161.8 level up, it actually coincides with another chunk of price structure. If you're looking left on the charts, coming in around about, call it 46,500 to 46,900 to 46,800. So you've got a band of resistance over there, and that would really be where we'd be eyeballing the market moving to next. If you look at the stochastic, there's also quite an interesting thing happening on the stochastic, because what happened is the market pushed up into this overbought position and then it started to roll down, and then what we had is what I like to refer to as a failed stochastic reversal. In other words, the market went into overbought territory, started to roll down, and then that roll down, that reversal, then failed with a break back up, the stochastic breaking back up above its signal line. That is quite a bullish. That's quite a bullish structure. Just analyzing the stochastic from our perspective, what I've found is when you see this happening, you generally see some follow through to the upside. So our expectation is that there will be some further upside, just based purely on looking at the structure here. And as I said, our next level of resistance would come in around about that 46,500 to 46,800 level, which is about probably 300 to 500 points. So it's not far away at the moment. So we could easily see that the market moving into that zone quite early in the new week. But one also needs to keep an eyeball or an eye on a further higher target level here, and it's something just to bear in mind. Remember, what happened was you had this initial impulse leg right here, and all that's been happening after this top here around about on the 25th of Jan is the market's been in a complex retracement. Then we had the breakout of the structure and a continuation move over here. Now if we project this because it's quite a, in a sense, it took a long time to play out, but it's quite a textbook breakout. You had market moving in with leg 1, 2, 3, 4, and it broke out on the fifth leg. Now if we take a projection of this initial impulse leg here and take it to where off the fifth leg, you can actually see that we can project the market to move up towards this 48,000, or close to this 48,000 level. And what's also interesting is if we take some Fibonacci's there, we take a Fibonacci on that projection, on that impulse leg. Let's just put in a 127, because I think that, just clean it up a bit. So we're taking a 127 projection. What you'll find is I like to use 127s and 161.8s when it comes to projections, Fibonacci projections. And you can actually see it comes in around about that 48,000 level as well, the 127 projection of this this impulse leg here. So essentially what we're saying is one could eyeball this this initial another 400-500 points to get to some form of overhead resistance, but if we break through that, then you could easily start looking towards that for around about that 48,000 level as potential areas where the market could move to. Does that mean we just go out and simply buy the market? No. What we're doing at the moment is we are just throwing ideas around in terms of our understanding of price structure, analyzing different aspects of price structure using some Fibonacci's to project where the market could go. To set up a trade in that kind of, against that context, one would need reasons to get involved. You need specific setups. It's something that we will keep an eye on, and if something does come across our radar, we will flag it in our daily to our daily subscribers. But really, just going out and buying this market with the expectation that it's gonna, move into this level zone over here and then hit this zone over here, that's not the way to approach it. What we're doing in this weekly perspectives report is just giving you guys ideas based on our understanding of structure of where the market could go. How you use that is going to depend on your individual trading setups and trading systems. So that's quite important. So that's how, from a structural perspective, that's where we're finding ourselves heading into the new week, which is a short week. Just bear that in mind as we head into the Easter weekend as well. From a volatility or ATR perspective, things are still fairly low-key. I mean, we really haven't, for this entire year, we haven't really hit, except for maybe early January. But even then, we haven't hit high daily ranges in this market. So things remain pretty much low-key on that front. So that's structural perspective and the top 40. Let's jump across and look at some of what's happening around the world in different markets. And maybe we'll start quite close to home by looking at what has probably been the most relevant market to be focusing on in the past week or two, which is the rand dollar. And looking at the weekly and the daily three-line break charts, you can see that, from a weekly perspective, we actually still in this strengthening trend, although this retracement that's happening on the weekly level is becoming quite deep. If we throw a Fibonacci at that, you can actually see that we've just retraced back into the 61.8 of this last leg of the move down, which started towards the end of August and to round about 1 week before the end of March. So does that mean we're going to start to see the rand strengthening? Not saying that at all. I'm just saying that we pulled back into a 61.8. What is critical from a weekly perspective is going to be this level here at 1450. We're currently at about 1377, so we're quite a ways off that. But if we saw the market break and close above 1450 on a weekly basis, that would be extremely bearish for the rand, because we'd be really just breaking this the solid or downtrend or strengthening trend that had been put in place. So that's definitely a significant weekly level to watch. If we switch over and look to the right here at the daily chart, I mean, here you can see the weakening trend. We had the break of the downside break of structure. Sorry, the strengthening trend. We had the downside break of structure or continuation down here, and here's that retracement level on the daily charts. And here we actually see the break of structure coming through a bit closer, coming in at about 14.14. So we see the market pushing through 14.14 and 14.15 on a daily chart. That would also be quite bearish from a rand perspective. So those are quite important levels to watch on a daily basis and a weekly basis. I don't generally do this for the weekly perspectives report. We tend to focus this more on the daily reports. But if we look at a 1 hour chart, this is where you can actually see a lot of the damage that's been done to the currency. So you had the strengthening trend nicely in place, and then you had just had this market breaking to the upside, and the rand's been in this weakening trend all the way up. So definitely on the hourly you're seeing the rand weakening, but what's going to be critical is that it needs to hold its form on the daily and then the weekly charts as a starting point. If we then switch over to, let's just have a look at the US. This is the S&P. Quite straightforward. I mean, the weekly's still pushing pretty hard, daily's pushing pretty hard. This retracement, this is what we've been experiencing over the past few weeks in the US. We've been in a bit of a retracement, and that's been putting downward pressure on the market. But if you look at it in the context of this daily, on this daily chart, you can actually see that this is just a retracement in quite a strong uptrend at the moment. So nothing too significant to look at from on the S&P as yet. I mean, we'd probably have to see the market come all the way back down to 2184. That may be a bit deep, but you know, technically, if we saw a break and close on a daily chart below 2184, then you could start to say this thing could really be rolling to the downside again. If we look at some of the other markets, oil market, trends are remaining fairly intact. We've got on the daily we had a break to the upside, and now we are in a nice continuation move to the upside, so that's looking quite bullish for oil. If you look at the weekly, things are still looking bullish. We've got a bullish trend in place with higher highs and higher lows being printed over here, but the market is in a retracement on a weekly basis. If the weekly was to push through that 50s, call it $57 level, it's coming in around about there, that would be quite bullish, or would probably signify additional strength or upward momentum in terms of the oil market. And lastly, if we look at gold, gold's quite interesting. What we can see here is we had this break to the upside over here, then we had this really deep retracement, a continuation move, but the market fails to make a higher high, so it's a bit choppy. This is on the weekly chart, and now we've got a continued retracement over here. So it's not the greatest looking weekly chart. You know, ideally one would have seen a continuation move breaking through this high level here, 1367. So we're seeing a bit of choppiness. What's also interesting to look at is if you look at the last time a 3-line break weekly candle was printed, it's the 6th of March. So what that says to us is that it's been fairly range bound, and we're not really breaking out of call it this tight little range over here on a weekly basis, coming in between 12 and call it 1260. Right, and you can actually see that here on the daily chart as well, where we had this break of structure to the upside, retracement, continuation move, and then the market just failed to put in a higher high, instead putting in a bit of a retracement over here. So again, that 1257, that 1260 mark is proving to have a bit of resistance attached to it, and it's quite important from a gold bull perspective that you see a continuation happening here for further upside. So, you know, if we put all of that together, what do we see happening over here? On the gold side, you know, we've got this push to the upside, although we need to see further continuation or just a drive through this level. So the gold is not really giving us a great indication of what could or couldn't be on the horizon. Oil is basically saying to us, listen, you guys, things are all hunky-dory and bullish. We're still pushing on ahead, which is great. On the US based markets, we're in a bit of a retracement, even though the overall trend is bullish. And finally, from a rand perspective, you know, the trend remains rand bullish. Very importantly, the overall trend on a daily basis. But as we saw when we looked at the hourly chart, the shorter term trend is in a bearish retracement, or in a bearish breakout. So what that essentially means is that at least in the short term, we should see some additional strength coming through on the markets. I just want to jump and look at one more chart here. If we jump back to the S&P and drop down to the hourly, let's have a look at this. That's quite a messy looking hourly chart, and really, you know, highlights some of the volatility in the international market. At least you can see a break to the upside, break to the downside, then it's retracing, continues to the downside, and now it's starting to move to the upside, because that continuation looks to be a false continuation to the downside. So very messy on the hourly chart on the S&P, and so we're really struggling to get some clear directions or indications from the international markets. But from a rand perspective, short term is saying further upside. So printing that against within the context of our structure, what we are thinking to, or our analysis leads us to believe, is that we will see some further upside early in the week at least, especially if the rand continues to weaken. And so we are going to eyeball this this resistance zone over here as a short-term target in the week ahead. What happens after that? Very difficult to tell, especially again within the context of you know, all the political happenings playing out. But one would expect that once we hit this resistance level, maybe some form of consolidation maybe on the cards before we try and take another leg up. If that is the case, we'll have to analyze where we are and consider whether this would be an opportunity, any pullback or consolidation would be an opportunity for us to get long over here, or whether we in a position where we're going to see some kind of a counter trend move. The market may be doing some kind of a double top in this resistance zone over here with some downside. On balance, what I would say is that as long as we have what, you know, the political backdrop that we do have at the moment, it's going to be very difficult for the rand to strengthen in the short term, in the immediate short term. So just be wary of just going out and saying this market's overbought and taking short positions. Sure, we could see that that kind of pressure coming through from the international markets, but at the moment the rand is really ruling the roost in terms of market direction. So guys, that's our perspectives for this week. As always, I hope you find it useful, and most importantly, as you go into the week ahead with your trading, please trade safely, adopt proper risk management, money management principles, and all the best for the week ahead. Cheers.